We should be live. And I'm just going to let a couple more people in here into the room. I'm sorry, guys, because I've normally got Monica doing this with me. So shout out to Monica because she just started a new job upstream. So I'm kind of alone this morning. So thank you guys very much for showing up bright and early this morning, both panelists and of course attendees this morning. We are going to have an awesome discussion that I know we're going to have, at least for me, I'm going to learn a lot. I know Dino is as well. So I'm sure a lot of people have just started dabbling in cryptocurrency, want to learn more about it, or maybe you're interested and haven't yet. So that is kind of going to be our discussion this morning. I am going to share my screen here, give a really brief overview of what we're going to be talking about here, and then we can get right into it. Let me see. All right, and let me know if everybody can see my screen.
Yes.
Good, thank you. All right, so Tech Hub South Florida. My name is Nikki Caboose. I'm the interim CEO of Tech Hub South Florida. And this morning, we've got how cryptocurrency is changing fintech is our topic. Our speakers are Maria Sabando, program lead at Blockchain Acceleration Foundation, Jose Lapadula, VP of Regulatory Affairs at Crypto.com, Drew Barnard, co-founder at Bitstop, and Reid Simon, head of credit at Blockchain.com. And our sponsor for this morning, actually all of our community coffees, is South Florida Business and Wealth. And I don't know if Mark is on this morning. I didn't see him hop on, but if he is here, somebody from South Florida Business and Wealth, I'm happy to give them a moment to speak as well. So Tech Hub South Florida, a little bit about us. Our mission statement, building South Florida into a tech hub. And community creed. So Tech Hub South Florida is wholeheartedly committed to building a welcoming, collaborative, and inclusive community for all. We put inclusivity first, engage with others, are considerate to all, and don't sell to people. So in short, we want to make sure that everybody feels welcome to the table and that we bring everybody in our tech ecosystem in South Florida together. And we are a technology nonprofit, 501c6. We are a membership-driven organization. We currently have a little over 200 corporate members from Miami-Dade through Martin County, with the purpose of fostering a community around innovation, startups, creativity. And these are just a few of our members, of course, not all 200 plus, but we've got smaller startups like Boca Code all the way through larger companies like Office Depot and Nextera, Florida Prestige, and so on. So we do support these smaller startups all the way to the larger and even enterprise level. I won't go into this in detail, but being a corporate member-driven organization, we do have different membership options that give opportunities to speak, member spotlights, PR and communication support, member directory pages on the website, and so on. If anybody is interested, please let me know. I'd be happy to go through that with you in a one-on-one. But again, I didn't want to go through that this morning. Gotta get to the important stuff. All right, and a little bit about our events. So in an average weekly basis, on Monday nights, we alternate tech talks. We hold them in West Palm, Boca, Fort Lauderdale, and Miami, and we move them around the region. Tech talks typically, hence the name, are a little bit more technical discussions. Our community coffees and our podcast, those are Tuesday mornings at 8 a.m. that are alternating weeks. So like this morning, our community coffees, they're all panel discussions, whether it's from something super technical to something that's maybe startup related or funding. We kind of move around the discussions. Those are pretty broad topics, and we cover a lot of different things in the panel discussions. Podcasts, we also hold those, excuse me, alternating on Tuesday mornings. And those we always highlight local business leaders, maybe somebody from the startup community, local innovators, and as well try to move those around as far as topics and folks. Last but not least are the Lunch and Learns. They are introductory workshops, hold those on Fridays from 12 to 1, so that people can learn everything from intro to JavaScript to how to give their pitches as a startup. Again, kind of move those around, but they are all typically intro level workshops. for anybody that is looking for a job, if you go to the website under the talent tab, there's a resume distributor, and the resume distributor, you can actually create a really small, really short profile and upload your resume. Once you hit submit, it goes to all of our members all at once. And on our Slack channel, we have a very active Slack channel, about 4,500 people. It's techhubsouthflorida.org/Slack. And then, of course, you can join any different channels in there as well within Slack to, meet people that are within your community. There's channels for startups, channels for developers, and so on. If you would also like to be added to our e-newsletter that goes out every Monday afternoon, you can actually just text us your email address to 561-250-7206. And I'm going to stop sharing my screen. Let's see. Do we have Mark or anybody on here from South Florida Business and Wealth? I didn't see anybody hop on this morning. Okay, I don't think so. So just want to give a shout out, and sorry, my voice is raspy this morning. Again, just want to give a shout out to South Florida Business and Wealth because they are always our sponsors, each community coffee. And hopefully if they do hop on, we can give them a few seconds there to speak. But we're going to go ahead right into the panel discussion. And how we're going to start is I'm actually just going to go with who's first on my screen. If you can give your name, the company that you're coming from, and a little bit about your background. And then once we get through everybody, we'll go right into the questions. So the first one on my screen is actually Reid.
Hey, so thanks for having me. Excited to be here. My name is Reid Simon. I've been with blockchain for about 4 years now, and I run our credit/lending business. Prior to that, I was at Uber, and then before that, I was more on the traditional side as an investment banker.
Perfect, thank you, Reid. And Drew, you're up next.
Hey, sorry about that. I had it on mute. Hi, I'm Andrew Barnard. I'm co-founder of Bitstop and co-founder of HODL Wallet. Started Bitstop back in 2013. We brought the first Bitcoin ATM to Florida. Today, we've grown our fleet to over 1,000 Bitcoin ATMs nationwide in over 35 states. We also run an open source free Bitcoin wallet called HODL Wallet. And I'm a local Miamian, born and raised here, and we've been holding Bitcoin meetups since 2013 in Miami. And I also run the Miami Bitcoin Hackathon, which we've thrown 6 successful Bitcoin hackathons and given away over 100 Bitcoin over the years to local developers in the community. And happy to be here, Nikki. Thanks for inviting us.
Of course, thank you so much, Drew. And next I've got Jose.
Thank you. Glad to be here, Jose Lapadula. I've been in the financial services area for about 30 years. I've been with Crypto.com for a year now. Basically, I specialize on the regulatory compliance side of things, especially the anti-money laundering issues and requirements within the financial services industry. The company that I work for has nowadays over 10 million customers at the global level. We are providers of crypto solutions, and our mantra is to put cryptocurrency in every wallet. So we're happy to be here and spread the wisdom for what we see as a growing phenomenon.
Thank you as well, Jose. And of course, I do not mean to leave our female on the panel last, so Maria.
Hi, good morning, everyone. I'm Maria Sabando. I'm a strategic advisor for early stage blockchain-based startups. Most recently, I joined Blockchain Acceleration Network, which is a nonprofit organization that also focuses around education, blockchain education, connecting, which includes recruiting and building and decentralized protocols. I'm also a community organizer in Miami, and I've had the pleasure to work with Andrew in the past. So thank you for all you do, Andrew.
Thank you.
Thank you so much, Maria. All right, so to start out our discussion, I am going to pick on you first, Jose. So for anybody here that may not be so familiar, can you just start off the conversation by helping answer the question, what the heck are cryptocurrencies?
And usually easy questions should have easy answers, right? This one does not.
Yeah.
And the reality is, what cryptocurrencies are depends on who you ask. And so, for us regular folk, I would say it's a form of money. It's a way of, dealing with the needs of our financial lives with a technology twist, but from a definitional perspective, is a medium of exchange that is represented digitally, and it's protected by cryptography, so it's secure. But having said that, in the US particularly, the answer of what a cryptocurrency is depends on, as I mentioned, to who you ask. So if you ask the anti-money laundering regulator, FinCEN, cryptocurrencies are currencies, it's money. But if you ask the Securities and Exchange Commission, for example, they will tell you that most likely it is a security because we use them for investment purposes. If you ask the Commodities and Future Trading Commission, they will tell you it's a commodity. If you ask the IRS, they will tell you it's property, that it's taxable. And so, the reality is that there is yet to be a consensus about cryptocurrencies are. For our purposes, I think we need to conceptualize it as the money of the future, in the sense that it will not be in paper form, in physical form. It's electronic. It allows us to take care of our financial needs in a way that it's fast, transparent, and comfortable for all of us who are more technology driven.
Perfect. Thank you, Jose. And for any of the other panelists too, just because I should have said this up front, is if anybody would like to add, even though I'm addressing the questions to one or the other, please feel free to do so. I want everybody to kind of be able to give their input as well. And thank you so much for that, Jose. I appreciate it.
Well, on that point, one other element I think I might add to what Jose said is, the idea that you don't need to transact through an intermediary. So you are your own bank. You don't need permission from anyone else to affect transactions. You hold your own currency and are able to transact however you like directly.
And I see Mark in chat also said, he said, great question, because his parents who are in their 80s don't understand what cryptocurrency is. Then they asked, is it similar to a bond?
No, a bond is a financial instrument. If you were to ask the SEC, for example, they will tell you that a bond and a cryptocurrency are most likely both to be qualified as security. But from practical purposes, a bond serves for corporate purposes to finance the operation of a business, and it's simply a way to raise money from the market, and you get a benefit in the form of interest on that money. A cryptocurrency is more basic in the sense that it's supposed to serve as the medium of exchange, the way we use money all around the world in a better way than regular money have been doing for us for many years. It's simply an evolution of the concept of money.
Very good. Thank you so much. So our next question here, Maria, is for you. So we often hear the words cryptocurrency and blockchain used in the same sentence. Can you explain what exactly blockchain is and what's its connection to cryptocurrency?
Absolutely. I see this happen all the time. I'm going to take a step back and try to explain in the most simplistic way. A blockchain is essentially a database. If you're familiar with a database, you kind of have an idea. The major difference is that unlike a traditional database where you have one central authority that's maintaining the database, in blockchain you have multiple people maintaining the data. Also, blockchains are known to be immutable. And what that means is that the transactions that are captured within a blockchain are cryptographically encrypted so that they are built on top of each other. And as they progress and the blocks are built and linked together, it is almost impossible to reverse those transactions, making it immutable. Now, in relation to cryptocurrencies, blockchain is like the base layer, and cryptocurrency is an application of that technology. It's one of the many. So in relation to your question about the bond, not to make this more complicated, but just so you know, with the way that technology has evolved with blockchain, you can now also have bonds that are created with cryptocurrencies, which is a new structure. And that's something that in this new space, we are trying to create an environment that allows for new financial instruments to exist, including the digital version of a bond.
Just to kind of add to that too, and also it's kind of like question 1 and question 2 are semi-related. But yeah, we have all these different terms because nobody owns Bitcoin, nobody owns the word cryptocurrency. There's no CEO, there's no company, there's no central bank, there's no government that issues it. So you have a bunch of different people that interchangeably use these terms like digital asset, digital money, Bitcoin, cryptocurrency, blockchain. And it's really like kind of, I think, Jose said it best. It is what it is, depending on how you use it or depending on how it solves a problem for you. Blockchain, a lot of people try to use it, almost like a panacea for anything. But ultimately, it really comes down to, it kind of becomes what it is for you, depending on how it's solving a problem for you. And I think that's kind of really the most important takeaway. Now, what I kind of like, I like to refer to it, if somebody's asking me like, hey, what is Bitcoin or what is a blockchain? I think the best way to kind of attack it maybe is a little bit abstract. Right now, we use a third party, or at least prior to Bitcoin, we use a third party to coordinate. We end up trusting internet companies like Twitter or social media companies like Facebook or banks such as Bank of America, Chase, et cetera, to essentially send value or send a message. We're using all these third parties to coordinate, with each other, and we're trusting them with our information. What Bitcoin and cryptocurrencies allow us to do is they allow us to essentially coordinate together without trusting a third party. Now, you can still trust third parties with digital currencies and cryptocurrency, but you can also now have the option not to coordinate through a third party. And you can now coordinate directly peer-to-peer without trusting a third party, when you're communicating or when you're sending value, et cetera. So I think that like the game changer with Bitcoin or cryptocurrencies is that they really changed the trust model. And that's the most important part. Now you don't have to rely on a PayPal. You don't have to rely on a bank. You don't have to rely on a social media company. You can now coordinate outside of third parties directly with other people, and you can independently verify your transaction, or you can independently verify a message or whatever it may be. So Bitcoin and cryptocurrencies changed trust, and that was a major breakthrough for kind of the previous world that we all come from, which is going through a third party for everything.
Very good explanation, Drew. And actually, kind of on that point, I'm going to skip around the questions a little bit because I wanted to talk about, because you were talking about the trust and kind of how it's done, and maybe if you guys could explain a little bit about. So I'm actually going to go, because this question was for you, Drew, was that I was reading, an article saying there was like 75 or 7,600, maybe more now, different like cryptocurrencies. And I'm just curious, like, how do you know which ones are the best or which ones are the top or which ones you should start with? Because for somebody that, may not know where to go and this is like a whole new realm for them, like, can you explain maybe where's the first places to start out, or how would you even know what's the most popular?
Great question. The easiest answer is start with Bitcoin, okay? Because when we talk about money or we talk about currencies, they're all relative to one another. So you can't compare a money unless you compare it to another money. And so what I always tell people that are starting out their journey is, if you can, start with a small amount of Bitcoin, all right? Because if you learn Bitcoin and you learn it, if you learn how to send a transaction or receive a transaction, you learn how to write down a seed from a Bitcoin wallet or a backup recovery phrase, that right there empowers you. And it also gives you a baseline or a reference point to compare Bitcoin to everything else. And that I think is really important because it does seem overwhelming. Like if I were to ask my mother or my father to like, hey, try digital currency out, they'll walk into Google or they'll walk into the internet and it's like, oh my God, there's thousands of currencies. There's Dogecoin from Elon Musk. There's, Litecoin, there's Ethereum, there's all these tokens now. And it becomes kind of a little overwhelming. And I don't blame, I don't blame people for getting kind of like, oh my God, like just completely oversensitized to digital monies and digital assets. So it's best and easiest to, try Bitcoin first, try learning some very, very important, simple concepts like receiving or sending a transaction, and then also writing down your private keys, like which we call like a backup recovery phrase. It's like 12 words that you write down and back up and save your money. And if you can do those like couple simple things, I think that that's really where you're going to really appreciate the magic of like, Bitcoin, and you can use that as a tool, a reference point to compare it to other digital currencies. And then from that point on, you can now kind of contrast, compare. And I think that's really going to help out a lot. So start with Bitcoin and then work your way into some of the more exotic cryptocurrencies, like Litecoin, Ethereum, et cetera. However, approach everything with a sense of caution and understand that there's no FDIC, there's nobody to like guarantee anything. There is nobody to like help you out if you lose your money. This is kind of like, use your own critical thinking and, be a little bit cautious as to what some people are telling you. Do your own research because there's a lot of scammers out there. There's a lot of people pushing things that, they have an interest in and they may not have your best interest in. So Bitcoin is probably the best to start with. It was the first decentralized cryptocurrency, and it's the best to start with because you can use it to compare it to all the other ones.
Yes. I would like to say that, when it comes to the comparison that Drew is referring to, at the very basic level, any individual cryptocurrency is created to try to solve sort of a technical problem with respect to cryptocurrencies, try to improve on what was the original cryptocurrency, which is Bitcoin. And so that new cryptocurrency, that new token becomes the fuel that incentivizes the ecosystem that this project is creating. So the same way people have to mine Bitcoin, they have to mine other cryptocurrencies, which means performing the verifications that allow for the blockchain to be created, the blocks of particular information on transactions. And so, depending on the particular project that we're talking about, you will see separate cryptocurrencies, and they all have a particular aspect that they want to develop or improve upon. And that's basically the reason to explain why there are so many cryptocurrencies out there. And I would say, in our own experience, there are, in the numbers of dozens of new cryptocurrencies coming to market every week. So it's like Drew said, Bitcoin and Ethereum are the better known because they've been around the longest, but by no means the only ones. And if you do your research, you can find wonderful things out there to participate in and see growth.
I would also like to add to Andrew's response. I think that before you purchase any kind of cryptocurrency, you need to understand what, not your keys, not your keys. There's some basic security that you need to understand before you take that initial step of purchasing something so that you can keep that asset secure in your hands. Now, in relation to Andrew's point of view, I completely agree. You should start with Bitcoin. Bitcoin gives you the strong foundation of what cryptocurrency is all about. And it's a good comparison point, but also because it's a very comprehensive cryptocurrency. It doesn't tackle just one specific thing, as unlike some others. Now, once you become more acquainted and understand that the different topics that are associated with the cryptocurrency, I want you to know that this space is still young enough that you can have the opportunity to ask questions directly to the founders. If you are more technically inclined, you can independently check the code of cryptocurrencies. If you're not, you can join Discord groups, Telegram groups, where you can ask the founders about the reason why they created the coin, and you can answer questions, technical and non-technical alike. So take the opportunity to do so as you're doing the research to get a better idea if you want to acquire that cryptocurrency. And if you want to see kind of what the current rating is, and this is like peer reviewed and other factors, there's two websites that I often look at, CoinMarketCap and CoinGecko, that gives you like a rating of what are the most popular assets to date. And it's interesting to see because if you go back, you can see at a point in time, what were the top 10 and how different they are now. So take a look and check it out.
Also, one other thing that I love about this space and what kind of really got me excited the first time I entered it is you make mistakes, right? So that's sometimes how you find things. It's how you learn. And so I think whatever step you take, the first one should certainly be small, and it's okay if you make a mistake. You can always restart over. You may lose your money, but start small, make some mistakes, try some things. And I agree. I think Bitcoin is probably the best to start with because there is so much connectivity to other platforms and coins. And there's just a lot of more kind of well-researched and presented materials for you to learn than rather needing to go down some rabbit hole to figure out what's new.
Perfect, thank you. I'm glad that was a good question because you guys all added to that one. So, my next question is for you, Reid. So I'm actually going to kind of mix one question that I had, in our topics, but then also what came through chat here is, so of course, like anything new and anything at all, really, there's always people that have to try to do something that's illegal or something that's wrong, right? So I want to talk about a little bit about how blockchain can help with that. So for those that may be skeptical, can you explain how blockchain is maybe helping identify some of these end users that are doing things incorrectly or illegal? And then also, kind of, I guess, second question to that is in chat, Dawn was asking about how are the cryptocurrencies protected from cyber risk? So I'm assuming, and this is me being naive, so if it doesn't go together, please let me know. But I'm thinking that blockchains can help with both of those, if I'm correct.
Yeah, so look, I think the reality, I think there's two important realities to recognize. The first is there's bad actors in every corner of every industry, in every facet of life, right? So that's kind of the first piece. And crypto's not any different. And then I think the second thing is, generally we are suspicious and as people, I think we're suspicious and kind of generally think the worst of things that are new to us that we don't really understand. So when you combine those two, and then there's some sensationalization in the media, it creates a self-fulfilling prophecy that, crypto is this kind of corner case that's really useful for illegal things or hiding money or tax evasion. But the reality is, far and away, cash, particularly the US dollar and the 500 euro note, are the preferred medium through which you should be efficiently transacting in illegal ways. And crypto is really not helpful to do that. I think for two reasons. One, while it is anonymous, you can't tell on your own whose address belongs to whom, but it's perfectly transparent. So every coin has a full history of where it was part of another coin previously. And so, these ransomware attacks or hacks or whatnot, these coins are known to have been stolen, and every future spend of that coin and derivative of that coin will always be flagged. And so there's a lot of resources online. Whale Alert is a good one that I usually have in my Twitter feed, that anytime there's hacked coins that move, it'll send out an alert, and you get an understanding of kind of really being able to actually visualize where these bad actor coins are moving through the network. And then there's companies like Elliptic and Chain Analysis who apply algorithms and kind of more of a strategic approach to analyzing blockchain data, and are able to kind of predictability scores And these are kind of I'd say the cutting edge of the new version of kind of KYC AML that exchanges are using to preempt some of these tainted coins from entering those ecosystems, and also working with law enforcement to identify coins that belong to certain addresses or have been involved with illicit activities. So that's kind of one view on I think misnomers around cryptocurrencies as some silver bullet to avoiding law enforcement.
Nikki, here I think it's also important to mention that for those of us in the industry that are providing access to consumers to purchase or sell or hold cryptocurrencies, we are required by government regulations to adopt an anti-money laundering compliance program to help fight those type of behaviors the same way a regular commercial bank would. And so from that perspective, taking the point that Reid made that bad actors are everywhere, I always like to point out that the first anti-money laundering statute in the United States was the Bank Secrecy Act of 1971. And so, from that perspective, the US government have been looking to fight bad actors in the financial services industry way before cryptocurrency and the blockchain came about. So the idea that there is something sort of suspicious or that enhances the ability of criminals to act in the cryptocurrency space is really a disfavor to the realities of what the technology offers. There is a lot more transparency in the crypto world when it comes to flows of money than you would ever have in the fiat world. And by fiat, we mean regular money. Like Reid was saying, large denomination bills are still the preferred method of laundering money. We see them, with the news that you see coming out of banks every day around the world. We are no different in the sense that we're also subject to attacks by bad actors, but we also have the ability to conduct investigations and do research into the behavior of our customers in a way that is simply not possible for a regular banking institution. So from that perspective, I'm particularly in this area. This is what most of my work consists of. So I am very happy to see that I always have arguments available to dispel those kind of fear-mongering rumors about Bitcoin and cryptocurrency in general.
I just want to add something in relation to the question of being subjected to cyber risk. Having come from the financial services background as well, banks constantly have a target eye on their back, and they are constantly under scrutiny, or constantly evaluating threats, or constantly fighting threats. When you own Bitcoin and other cryptocurrencies, you are the bank. So you need to take precautions on yourself. And nobody knows, maybe if you go and blast on social media, but nobody really knows if you own crypto. So you're not subject to that risk unless you are screaming on top of the building, I have Bitcoin. So take personal precautions yourself when you own crypto, and you can manage that risk as well.
Yeah.
Perfect. Thank you. I mean, at least for me, that makes me feel more comfortable, because that was one area that I didn't know a lot about. So I'm assuming other people listening to also had the same question. So thank you for that. I also had the question of just, and Jose, this one is for you, but so in the US, at least I think I know for myself that Bitcoin is legal to purchase in the US. So if we're talking about whatever it was, that number, 7,000-8,000 different types of cryptocurrencies, are all of them legal? Some of them? How do people know, again, which ones they maybe should or should not play with? Can you give us a little bit of insight into that?
Sure. From the perspective of the purchaser, the person buying a cryptocurrency, it is always legal to buy them. Which ones are available to you depends on where you go, but basically any supported cryptocurrency out there is subject to be purchased. For the seller, however, it's not that it is illegal to sell it, but it may be subject to certain requirements like registration, licensing, clearance with government entities. And so when we go back to the question of what is a cryptocurrency, the particular answer will drive the type of requirements you need to fulfill in order to offer for sale cryptocurrencies in the US. Like I said, if the SEC were to determine that your coin is a security, then you need to register with the SEC in order to distribute that security. So from the perspective of the purchaser, it's always a very straightforward answer. Yes, you can buy it. The price at which you buy it will affect any future tax consequences that may come with it. The same way if you buy a share of stock and the price of it goes up, by the time you sell it, you have a gain, and that gain is taxable. The same concept applies to cryptocurrencies, but the ability to purchase is freely exercisable by any individual or corporation.
And excluding the peer-to-peer acquisition method of gaining cryptocurrency, another form of guidance is when you join a crypto where you are. So these companies that create cryptos, not Bitcoin, because Bitcoin is everywhere. They tend to have deals with the cryptocurrency exchanges to only sell them in respective jurisdictions. So if you are in the UK and you're trying to purchase a particular coin that's not sold there, you wouldn't see it listed in the exchange.
Thank you, Maria, for that too. And actually, I did see both through the regular chat and the normal or the private chat come through, as well as questions about, so I guess a lot of people are asking about, how is this going to be coming out through major banks and all of that. But before I got into that question specifically, I wanted to ask, maybe to preface this, is if Maria, if you could explain what exactly is an online cryptocurrency exchange? Can you explain what that is before we maybe get into that next question there?
Allow us users to trade cryptocurrency with either fiat, like the dollar or the pound, or other cryptocurrencies.
Okay, sorry, Maria, I'm getting a little bit of feedback from your side. Is everybody hearing that too?
Yeah, I had some difficulty on the last answer.
Yeah, Maria, it's happening again. I don't know why, but we're hearing sounds like tapping or something on your side.
I don't think
Okay, it stopped, whatever the noise is.
Okay.
There you go. Okay, now we can hear you. Yeah, if you could repeat that, I'm sorry, Maria.
Yeah, no problem. So a cryptocurrency exchange is basically a platform that allows us users to be able to trade cryptocurrencies with either fiat, like the US dollar or the pound, or other cryptocurrencies.
I would like to add a little bit to that, in the sense that you can have situations where your counterparty is a crypto company like crypto.com, for example. We offer in our platform the ability to buy and sell cryptocurrencies where we are the counterparty, but we also have mechanisms where we can provide the technology to bring people together, where one is looking to buy, one is looking to sell, and our technology simply pairs the offer. So that is what we refer to as an intermediated exchange.
Yeah.
Thank you, Jose.
Exchanges, there's two major types: centralized exchanges that are managed by an entity, a business, and decentralized exchanges that are more peer-to-peer.
Okay. Thank you for that clarification. And actually, I wanted to, Drew, see if you could explain a little bit more about exactly what you do and like what is a Bitcoin ATM? Because, and again, please correct me if I'm wrong on any of this, but that's different, right, than the online cryptocurrency exchange. That's completely different.
Yeah, it's very, very different. So we are a cash only service. So I'm serving basically a very underserved market. When I first bought Bitcoin back in 2013, it was very difficult. I had to meet up with a buddy of mine. He was actually running a company called CoinGig at the time, I believe. And, it was a peer-to-peer kind of transaction. And that's kind of how it was done. If you wanted to buy a small amount of Bitcoin for a little bit of cash, like basically you have to meet up with a stranger or a buddy who was already in Bitcoin. Coinbase back then had just launched like a few months earlier, and you had to wait like 30 days to get an account. So there was very little online exchanges. Mt. Gox was just hit or miss if you could even get money over there. And if you could you withdraw it? It was high risk. So even the online exchanges just didn't have a lot of capability. And then if you wanted to buy it locally for cash quickly and get it instantly, your options were very limited and extremely high risk. So that's where I saw the biggest problem. And then we saw Bitcoin ATM launch in Vancouver back in 2013 in November. And it launched at a cafe, and it did about $1 million in volume its first month. And it had worldwide press. And I said, okay, let's bring one to Florida. Because at the time I was like, this is game changer, but how is my mom? How is my dad going to buy Bitcoin? And like, how is this ever going to go mainstream? Like if I got to go meet up with some, Canadian guy at a Starbucks and count cash like it's some sort of drug deal, when in reality we're just exchanging math for paper. So long story short, we set about the journey of bringing Bitcoin ATM to Florida. We went and got a license. We were the first Bitcoin company to get a license from the Office of Financial Regulation here in Florida. And we put the first Bitcoin ATM down in August of 2015 in Wynwood. And then from there on, I was manning the customer service at the time. And we had people calling from Orlando, from Jacksonville, from Alabama, who were driving down to come buy Bitcoin, literally 8 hours, drive to come buy Bitcoin, $500 of Bitcoin from a Bitcoin ATM. And I go, God, the market pool is crazy. And I had no idea. We didn't do any advertising, nothing. So it was just really like a necessity is kind of what opened my eyes to it. And at the end of the day, it's one of those things where, we are in Miami. We are the most unbanked and underbanked city in the United States. 1 out of every 5 people don't have a bank account here in Miami. And I think that's where Bitcoin is really solving like really, really tough problems in these areas of high friction. I need to send money back home to my family. I need to send money back to Brazil to my daughter or whatever it may be. I need to go ahead and pay for something online because I don't have a credit card. And this is where Bitcoin kind of like solves these pain points. And this is what we do at Bitstop is basically we are trying to make Bitcoin more and more accessible. And it started first with a couple of things, like essentially Bitcoin infrastructure started with miners. Okay, they are the original kind of first like exchanges that kind of happened in a way. You need people to mine the Bitcoin to put new Bitcoin supply into the ecosystem. Then you had exchanges like Coinbase, blockchain, etc. These guys basically made it easy to go ahead and exchange, your cash or your USD via ACH or wire for Bitcoin. And then once the exchanges kind of started rooting, then you had Bitcoin ATMs, which is the third downstream tier of exchange, which is we're serving cash markets. We don't do ACH. We don't do wire. We are making. You want to go and buy $100 of Bitcoin for cash, and Bitcoin ATM is literally your best and easiest option. And what's great about Bitcoin ATMs is that you're not waiting 4, 5, 6, 7 days for your Bitcoin to settle. You actually walk away from the ATM with your private keys. So it's this very beautiful, harmonious transaction where you have a bearer instrument, cash, for another bearer instrument, which is Bitcoin. And then we have instant settlement right at the machine terminal. So I put my cash into the Bitcoin ATM, and then the Bitcoin ATM sends me the Bitcoin to my wallet on my phone. And we have no credit card fraud as a result. We have no transactions that drop out or whatever. It's really just a beautiful, easy, fluid experience for the customer. And it allows them to get a small amount of Bitcoin quickly and experiment with Bitcoin for their first time. And 60% of our customers are first-time Bitcoin investors. And they're showing up at the Bitcoin ATM without a Bitcoin wallet. They've never even downloaded one before. So we spend a lot of time on educating the customer at the machine terminal
where they can take their time, read the information on the screen, download a wallet, and they can even call into our customer service department where we have people answering phones in both English and Spanish, and we have email support. And we walk through our customers on how to buy the Bitcoin, how to download a wallet for the first time, how to receive it, how to send it. We put a lot of education on our website because it's important. This is a new thing. And I look at a Bitcoin ATM as a portal into the digital economy where you can convert your physical paper tokens into digital tokens and allow you to participate in a global payment value protocol where you can interact with other people all around the world now. Even though you're in a small town in the middle of Arkansas, with a Bitcoin ATM, you can now participate in global commerce, which is a very powerful thing. And I think that's really the game changer in all of this, is that, you know, Bitcoin allows you to participate now internationally, wherever, without any permission. And I think that's the problem that Bitcoin ATMs are really solving, especially for middle America and people that have been kind of, you know, largely underserved by the exchange market and largely underserved by some of the bigger companies that are tackling the lower hanging fruit, you know. So that's kind of where Bitcoin ATMs fill in the gaps.
I love that, Drew. And I'm glad, I don't know if you answered that way because you saw the question in chat, but it was perfect because Mark was asking about accessibility and being able to purchase Bitcoin or cryptocurrencies for people that may not have the internet or access to the internet. So I think
Don't worry, Mark. This isn't my first rodeo.
that was a perfect answer. But Don also put in the chat here, are there any of the Bitcoin ATMs that are in Palm Beach County as well? So are they just in Miami in South Florida, or do you have them in other areas of South Florida?
We absolutely have them in Palm Beach County. I encourage you to go to our website at bitstop.co, find a Bitcoin ATM near you. And again, Bitcoin ATMs are not going to be the cheapest way to buy Bitcoin. I'll tell you that outright. All right. We are a convenience-based service. So Bitcoin ATMs charge anywhere from 8 to 20% is what the rate is for buying Bitcoin with cash. We have to charge that rate because dealing with cash is extremely costly. We have to pick it up. We have to get a very, very hard to get bank account that will take the cash. So what we're really doing is providing convenience and instant settlement. You leave with your Bitcoin. So if you want it today, instantly for cash, Bitcoin ATMs are the best way to go about getting that Bitcoin ATM. Think about, like, you know, if you're going to go to, let's say, buy a 12 pack of paper rolls on Amazon, you can get that 12 pack of Bounty, let's say, for $15, okay, or $20 on Amazon. You may wait a couple of days for it to ship and get to your house. However, if you need that one roll of paper towels today instantly, you might have to go down the street to a local convenience store. And for that one roll, you may pay $8 to $10 for that roll of paper towels. However, that convenience store provided that convenience and that instant kind of settlement of that paper towel. So look at Bitcoin ATMs as a great way to get Bitcoin quickly now. And that's kind of the service we provide. And I personally think it's a great way to just your first foray into Bitcoin, to try a small investment. You don't need to go buy $25,000 and feel like you missed out. You can go buy $100. You can go buy $10, as little as $10 from our Bitcoin ATM. And that's really, I think, what the whole point is that just go out there, experiment, buy a little bit of Bitcoin, receive it to your wallet. We literally tell you to download a non-custodial wallet. That's why we created HODL Wallet. You know, we saw a lot of problems with a lot of centralized wallets and a lot of user issues. Anything ranging from I don't see my Bitcoin to, hey, this guy, you know, this wallet service is not, you know, it won't let me move my Bitcoins because they think it's suspicious activity. A lot of people get caught up in a dragnet of kind of compliance and so forth. I'm sure Jose and Reid will tell you as much. Their services are not perfect. You know, they're trying to literally like go through millions and millions of customers to try to figure out who's doing the right thing and who's doing the wrong thing. And even innocent people get caught up in that. And that's not their fault. It's just part of like how these early beginnings are. So this is a great way to download a non-custodial wallet, receive the Bitcoin yourself, take possession of your private keys, back them up, and then send the Bitcoin without having to rely on a third party. And that's really what we're doing with Bitstop. We're trying to change people's behavior and push more of a non-custodial environment. I think it's very important that if you take away anything from these conversations today, because we're going to talk about a bunch of topics, really, really concentrate on taking possession of your own Bitcoin. It's a little bit riskier because now you have to trust yourself, and you're granted now you have a lot more freedom, but with all that freedom comes a lot of personal responsibility. That's why start small, buy 20 bucks, receive the Bitcoin, send it, back up your private keys. And if you can do a few of those things, you've really empowered yourself. And then you can teach your family, which you'll empower your family. And then your family will teach your community, and you'll empower and secure your community. And that's what really like I'm excited about for the future with Bitcoin, is all this empowerment, like from the individual level, like basically penetrating uphill to families, communities, and eventually countries.
Huge. Yeah, it sounds like education is the key here, and just getting started in small ways. So I appreciate that, Drew. I've had, so I know this was one question on my list, and I've seen it come through again in the chat and private chat as well. So I definitely want to address the question, and I'm going to put this towards you, Reid, is just, you know, obviously right now this is so disconnected from the normal banking industry. So with finance being such a highly regulated industry, do you see, you know, typical institutions and banks starting to adopt cryptocurrency usage, or how close do you think we are to that?
Yeah, so I think it's interesting because all of the benefits that we talk about that cryptocurrencies provide are sort of existential threats to the banks that we know today as they operate. For the longest time, all of these banks, whether it was JP Morgan or Credit Suisse or whomever, didn't even provide their private clients access to crypto. We've seen kind of a very big change occur over the last probably year and a half. I think because a lot of the kind of the benefits of an independent currency that isn't driven by a central bank and politics has really come to fruition. Everyone has seen kind of the headlines with inflation. People realize that in their real life. And that kind of manifests in changes for how institutions interact with crypto, more so from as another asset class than for kind of a lot of the values that we've been discussing for kind of securing your own currency and managing that for your independence. But you know, crypto is a $1 trillion asset class. That's huge, absolutely huge. There's a lot of hedge funds, there's a lot of banks, and even some central banks that hold it. And that's only going to continue to increase over time. We see it in our institutional business. A lot of hedge funds coming into the space that had no interest in it, you know, 2 years ago. And I think, you know, another interesting aspect to it is, yes, crypto is volatile. You can say that about oil. Oil traded negative about a year ago, but it's actually really uncorrelated with a lot of other asset classes. And so very kind of elementary finance is the more diversification you can add to your portfolio, the safer it is. And so we're seeing some of these banks start to look at crypto as really an uncorrelated asset to their existing portfolio, and holding even just a small percentage, even if it's, you know, less than 1%, has really material benefits to the overall health of your portfolio. And so I think that's more of the angle that we've seen for more of the institutional adoption, where they're not so much interested in holding their own private keys and kind of not needing to interact through an intermediary, but it's much more a testament of this is the future of money for the internet, and they see where the ball is moving.
Perfect. Thank you, Reid. And we've got just about 60 seconds here. So my really last question, if we can kind of go around real fast, because I did get this question in private chat, what I thought was a good one. So again, for people that are just kind of figuring this out, really quick, some feedback, or what are your favorites as far as like the different platforms, Coinbase, Robinhood, so on. Just wanted to get some feedback on that real quick. So whoever would like to take that.
Crypto.com.
There you go.
An easy one. We provide services for the basic investor. We have facilities to take you through every stage of the growth of the industry and your own comfort with it. But there are wonderful solutions out there outside of us. What I would use the time to say, to back up what Drew said, try it out, see what it does for you. You'll find that it provides a lot of benefits and it's the future. So go ahead.
And one piggyback point on that is, and Drew did touch on this, is the difference between custodial and non-custodial. There's a lot of different platforms, and I think that before you choose any platform, I think the first thing to do is determine whether you want to start with a centralized custodial platform or a non-custodial platform, and then from there you can choose.
Yes.
Yeah, just keep in mind, custodial means bank. It's no different than putting your money in Chase. If you put your money somewhere like in Coinbase, they have possession of your Bitcoin and they are telling you your balance, but they are holding your private keys. So your ability to remove that Bitcoin and take it with you is subject to Coinbase's authority. So start with non-custodial, which is like you are your own bank. With Bitcoin, you can bank yourself, hold your own money. Do you want to hold all your money? Probably not, because at the end of the day, you also have to trust yourself. So a diversified approach to custody is the best way. A lot of people think that diversification means I got to buy all the coins. I look at diversification in Bitcoin as like, okay, let's start with Bitcoin and diversify our storage techniques, diversify the way I custody my Bitcoin. Maybe I'll keep a little bit with a bank like Coinbase. Maybe I'll keep the majority of it myself. Maybe I might even take some Bitcoin and hand it to friends and family to help me hold it as well. These products and services like blockchain, crypto.com, Bitstop, we are all building tools and services to make it easier to hold your own money over time, because I guarantee you, neither of these guys or neither does Maria or anybody else really wants to hold your money long term. I think it's going to be a big problem if we keep taking control of people's money in the long term. So we hope that you guys will take a little bit of time to learn it yourself and hold your own money, because that's what Bitcoin was made for. And that's the ethos of Bitcoin, being your own bank.
Yeah, definitely. And if you're planning to keep your money in a centralized exchange, keep them on their toe, extract your money often, and that way they know that it's not like the old system where people put their money in the bank account and forget about it. You are responsible for your money.
I like that. Perfect. Well, so we are just over time. So I want to say thank you, of course, to all the panelists, Reid, Drew, Jose, Maria, and of course, Beth for doing our ASL interpretation. Of course, everybody that came to listen in. I know I've learned a lot, so hopefully everybody is as well. So thank you guys and have a great day.
Thank you.
Thank you so much.
You're welcome.
Have a great day.
Everybody.